What's up, traders? It's Professor Shmoney back here with another video for the Mastering Stock Chart Analysis series. Today, we're going to be going over using multiple time frames for analysis. So, let's get straight into it. So, multiple time frame analysis is based on analyzing a chart starting with larger time frames and then working your way down to smaller time frames. So, these are pretty important. Highlighted them in red. These are things you will want to remember when trading. So a general rule is that the longer the time frame, the more reliable the signal is being given, using a longer time frame to define the primary trend of whatever they are trading. So which time frame should I use? So this will depend on your trading style. So I just put some examples of what you might use. So for a swing trader, you may want to focus on daily charts for decisions, use weekly charts to define the primary trend, and 60-minute chart to define the short-term trend. For day traders, you may want to trade off the 15-minute chart, use a 60-minute chart to define the primary trend, and a 5-minute chart to define the short-term trend. For long-term traders, you may want to focus on weekly charts while using monthly charts to define the primary trend and daily charts to refine entries and exits. So these are some good examples of, depending on your trading style, what time frames you may use to analyze your chart. But this will just depend on your strategy and your trade style. So using the day trader's time frame analysis on Bitcoin, first we're going to take a look at the 60-minute chart to define the primary trend. So looking at the 1 hour chart, we can see, using our skills that we've learned in other videos, we can see there's a bit of a trend here as resistance. So we have 1, 2, 3, 4 points that it's touched. So that seems to be a pretty valid trend. Um, we may even have a bit of a support trend here that we can use. So we have 1, 2, 3, 4, some pretty good points that we could use as support. And then we want to use the 5-minute to define the short-term trend. So as we can see, it's starting to trend down to the support level. And you can, for as day traders or scalpers, you may want to use the 5-minute to determine where your entries are. So for this setup, we might do something like this. Maybe we'll buy right at the support level, since we know, okay, so this point for 1, 2, 3, 4. So this, at this trend level, it has been support quite a few times. So we might do something like this. So something like this. Using our stop loss, of course, as traders, you always want to use a stop loss. So coming in here, we might, depending on your risk level also, you might want to change your stop loss. But it might look something like this as a day trader using multiple time frame analysis. So thank you for watching, guys, and I'll see you in the next video.